Firstly, I'd like to introduce Tobin Dommer. Tobin is a FinTech attorney here at Shepherd Mullen. Shepherd Mullen have been incredible in their support of our building this community and interest in FinTech. And I'd like Tobin to come and have a few words.
Oh, sure. Hi, all. I can do it from back here. Thanks all for coming, and we have a great panel, so I won't take up too much of your time. But we're an international law firm and like working with startups and investors, particularly in this area of FinTech. So grab somebody afterwards if you'd like to chat. My partner Bill is here, and I don't know that may be it tonight.
We were wondering if somebody could explain a SAT just for the crowd. Generally on a high level. No, I want an attorney to do it.
Oh, we're serious.
Grab me after. Next month we're doing ICO versus venture funding, so show up for that one.
There he's on the hot seat. So we do usually have our crypto broadcast. Unfortunately, I was a bit distracted tonight and didn't hook it up. But if you go to YouTube, FinTech Silicon Valley, you will see Shane's updated crypto news broadcast and or on our website. And he always covers the latest, particularly legal considerations around the crypto world. So please tune in. I'm sorry we didn't get that hooked up tonight. So without further delay, I'm going to pass this over to our moderator, John. He's a journalist here in the Bay Area, and he's a fabulous moderator. I've had him before, so I'm just going to pass him over, and he's going to introduce the panelists. Thank you, John.
Okay, you're welcome. I'm not going to let you guys introduce yourselves, because I by no means could ever, tell your brief stories the way you could. So I'll just have you go first, Steve. Go ahead and tell us your background and what brings you here tonight.
Sure, so I'll just go with how I got into the crypto space or when. So back in 2012, I was running a software services company, and one of my customers said, hey, we want to implement this Bitcoin thing into our payment gateway. And so I assigned one of my engineers who stayed up all night and came in the next morning. And I think we should stop everything we're doing and just get into the Bitcoin business, forget all this other stuff. And so once I realized that the invention was this now token that you could move across all these different systems as opposed to something that was captive to Linden dollars or virtual currencies inside of games. That's when I had the aha moment. But anyway, so I founded GoCoin, which is the number 3 payment processor in the world still today, and ran that company for 4 years. And then about a year ago, I joined Block. And because I really felt like enterprise was the next big frontier. So Block is putting large blockchain systems into the biggest enterprises. Some of our customers are the Fidelities, the Discovers, and big financial institutions like that. And also we are, doing some innovative things in Block Labs, which is, spawning a lot of different blockchain projects. So I'll stop there.
I don't have a background in LA. He's at matching socks, by the way, if you can't see from him. Pretty cool. So yeah, my name's Swanson. Founder of a company called Elm Labs. Prior to that, I guess for those of you who actually know me, I used to work at a company called R3. R3 is built a consortium of over 100 financial institutions, including most of the investment banks. And my role there was head of market research, so I had a chance to see 500 or so different companies and entities and try to filter them for our organization, most of which, I'd say 90% were either outright scams or just couldn't fulfill that. And my role now at this company that I created is to basically do the kind of diligence I was doing there, but for a wider set of clients that's working on enterprise. So a third of my clients are enterprise, including R3 and Clearmatics, and the other 2/3 are early stage software companies who are trying to pigeonhole shoehorn a coin onto the platform that they probably shouldn't. And so I tell them they shouldn't, and they don't listen to me. And then I typically introduce them to law firms. I haven't had the chance to meet you guys here at this law firm, so maybe I could do some deal flow your guys' way. But bottom line is I do a lot of reading, a lot of diligence. Kind of cranky. I've been in this space towards the end of 2012. I was mining in China, free electricity. No, I didn't become rich. Please do not kidnap me. You will not get any coins. And my wife will definitely not give you any coins. They do not exist. And I enjoy the FinTech world just as much as I hope everyone else on this panel.
Hello, I'm Isul Cho. I coming to the space as a developer, blockchain engineer. There was no job at all for a while. So I was complaining about this to him. When we met 2 years back, at the time I was looking for a job. I guess there was not. And then I work as a freelancer for a lot of different financial institutions, and also work for the HSBC for a while. So where we met again as R3 member and then R3, and that's our work. Inside our HSBC, our team built multiple financial use cases. One is maybe the payment, and then post-trading settlement, and then clearing settlement, and then the payment, and then and also the supply chain project we built. Trade finance. Yeah, of course, it's really important for the HSBC. And then I joined the ICO world, and then also the 5 friends of mine and we set up the largest crypto funds in South Korea, because at the time the South Korea is becoming the really largest market in the world. So now it's still the largest one. And then I left and wanted to help a lot of different projects in the more hands-on. So I've been advising the project. So maybe one of the most well-known right now is the Icon. So I don't know if people know about it. and then now I'm here today with the FBG Capital, which is the largest crypto fund in China. So very nice to meet you.
Matthew and Merle. I wear a couple of different hats. I'm one of the managing partners of Keiretsu Capital. Keiretsu is the largest angel organization in the world and the most active tech investor in America. But we invest across all sectors, so IoT, artificial intelligence, life sciences, FinTech, and so on. My second hat is my wife and I invest in FinTech, digital commerce, and electronic commerce. And she is a FinTech expert, so she sits on the boards of Royal Bank of Scotland, Unisys, Pfizer, was First Data, Zoom, and others. And that's why we got into blockchain quite early, because that was an area that she needed to understand. And so very fortunately, she became chairman of the advisory board of Blockchain Capital Partners, Bart, Brad, and Stevens, and Brock Pierce at the time, 4 or 5 years ago. And we're in almost all of their funds, and incredibly happy that we are. They're a great team. And then I'm on the advisory board for Bitbull, which is the first cryptocurrency hedge fund of funds. And then we also have our own Keiretsu Capital blockchain VC fund of funds. So there's sort of the horses in the race, and that's the latter is really, I think, why I was invited here today.
Okay, great. So Matthew Merle, Yiso Cho, Tim Swanson, Steve Beauregard. Great to have you guys. So the first question I wanted to try and ask you guys was your own personal. Are you personally investing in cryptocurrencies? Yes or no? Why or why not? And sort of what does it look like? Or if you're not investing, what would it look like?
Sure. I used to day trade when I was with GoCoin. So part of what we did was we were constantly acquiring coins, and then we would have to sell them so we could pay the merchants off their portion of it. So for a number of years, I was heavily trading all the time. So I learned the sort of cadence of Bitcoin and some of the altcoins, Litecoin, Dogecoin, and so forth. So once you learn the cadence, it's actually sort of shooting fish in a barrel, to be quite frank, because it's these are thinly traded markets, and they have very distinct behaviors to them, even to the point that we could identify patterns within a week of what time of week that it was going to go up, what time of week was going to go down. That's a little bit changed now, but in the early days, it very much was that way. On every Tuesday, you knew you were going to have a dip in the market, and then as we came into the weekend, it was going to start building back up. And very, very, very interesting. But anyway, I am certainly long. I am long on the ones with network effect. Every single coin I own for a very specific reason. And what it could be anything from Bitcoin being a great store of value, but an absolutely trashy, horrible transactional currency. But I will hold that because I think it's a great store of value, and the scarcity makes it interesting. There's other tokens that I really like, such as there's a new one that's come out called Wax, and I love that one because Wax has a cycle of use. This company called Opskins. If anyone has kids here who play games, and they like to have their gun look cool, or they want their character have really cool armor, they'll pay stupid amounts of money for these things. And right now, they do probably somewhere around $20 million a month in Bitcoin sales, and they're frustrated by the transaction fees that they're paying for this. So Wax is the new token they're going to use to start to use as the currency inside the game. So a great utility token. I'm long on the industry, but like I said, I'm very specific about why I own any particular coin or token. And there's certain ones that I would never touch for in a million years. And there's others I grab for speculative reasons because I can see the patterns. So anyway. I'm supposed to give some disclaimer about it. I don't give financial advice. Don't rely on it. Blah 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 blah. So.
Yeah, I actually, even if I had coins, I just wouldn't tell anybody because I think that's a security hazard. So you see stories of people being kidnapped or ransomed, and I do not plan to be kidnapped or ransomed. So my initial position is always.
He has a lot.
I can tell you right now,
you guys can say that. I have a lot of reasons for why I don't think you should own any, but I don't want to monopolize the conversation on that. I will say that even if I'm fairly, I would say, cynical on the market as a whole, I don't think there's a really good place to legitimately short any of this stuff. So I don't have any trade positions. Even if I wanted to short, I think that you have a huge counterparty risk on most of these platforms. As to you, hopefully a little bit more optimistic.
Question is, am I investing in, right?
Are you investing? Why not?
Yeah,
If you aren't,
I'm in crypto funds, and then the previous job was also crypto funds. I guess that I'm definitely investing in. And then, I guess there are so many different coins, so I guess it's really hard to, everybody has a different taste and different preference and different interests, so I guess it doesn't make sense for me to keep this token is the most important thing. It's almost like I like the red color, so I guess maybe not right now, I guess maybe after drinks maybe I can share. And then, and then I'm very ideally believing in the decentralization and the decentralized world. I want to see as the interest, the personal interest. So with that position, I guess I'm investing.
We're still trying to forgive you for being a banker.
So I've already said I'm a long-term investor, and in markets with a high degree of failure and relatively concentrated success, you have a choice. You either try and pick the success or you have a strategy of diversification. And so we follow a strategy of diversification. So we are substantially invested in the space, but I'm looking for products and teams that are both insiders in the space and have a lot of portfolio assets or exposure, so that then we are very diversified in the space. So yes, it's long, diversified, and through expert vehicles.
All right, Matthew, I'll actually start with you. We can come back this way. You said that you're 100% certain that a lot of money will still be made and a lot of money will still be lost. And how does that inform, do you recommend the investment strategy for the average person?
I probably should have answered that question first, but yes, absolutely. So will a lot of money be made in this space? Absolutely yes. Why? Because the internet has to be redesigned and it's coming to the end of its life. And the fundamental flaws of a communication-based platform that was built 30 years ago need to be resolved today. Cybersecurity, identity, temporal indeterminacy, these things we have today in today's internet, and they can't be in tomorrow's internet. And the greatest hope for solving those problems is technologies that are designed with those in mind. And blockchain is designed with many of those things in mind. It's more secure, it's more identity and trust oriented, it timestamps things, etc., etc. So absolutely, tomorrow's internet will have things like blockchain embedded in it, and that's a huge wealth creation opportunity. And then cryptocurrencies specifically, we don't really understand it in America, but if you live in a part of the world in which there's hyperinflation, devaluation, expropriation, and you don't know when you're going to be on a boat to somewhere else, the value of an asset that you can place somewhere else and pick up whenever you need it is huge. And that's most of the world. That's 2 or 3 billion people see that value. We don't really see it because the US dollar is a pretty good form of currency. And then loss, it's software. And software can be copied as many times as you want, infinitely, and it's subject to technological obsolescence. I was an investor in Inktomi. Does anyone here know who Inktomi was? One person. 2, 3, 4, but almost no one. Inktomi was the world's best search engine company, bar none, and it got wiped out. And I have no ability to spot which fork of Bitcoin will be the winner, let alone whether Bitcoin will be there at all in the future.
I agree. I'm going to go out of sequence here a little bit. And you're absolutely right that the internet's broken. And one of the things that cryptocurrencies give the ability to do is to align interests and build communities around an idea and a group of people that want to accomplish the same thing. And by I say alignment of interests, I think of a simple example like the reason that we have so much fake news right now. Because to put an inflammatory headline up, even with garbage below it, incites all these people to now repost it, because that website's now getting ad fees that are coming to them to drive people to these pages. So there's no incentive, the incentives are completely out of alignment. What the reader wants to read has nothing to do with what's being posted. They're just trying to get eyeballs to come there. Another really easy example is you think of, Apple wants to sell you a cable so you can plug your devices in. They're not going to use a standard cable that I can get anywhere, and it jacks the price way up. Okay, is that in the consumer's best interest? Not at all. But if you look at the token economy and what's building here is we now for the first time have this ability to align all the interests of the token holders because we all want the same thing. The token holders, the people that are going to build the apps, the distributed apps on top of the token, and every person or every player in the ecosystem, every actor has the aligned interests. So that's what's really exciting to me.
Tim, you still 25?
You sure?
We want to hear your negativity.
Well, I don't have anything really to add. If we're being intellectually honest, most of these like ICOs or whatever we want to call them, the reason there's popularity is because non-compliance is the innovation. But that's only going to last as long as regulators catch up. I mean, at some point, regulators are going to say, hey, we're not okay with this non-compliance. You either need to go through some kind of exemption or actually fill out the registration requirements. And that's going to kill off a lot of the guys trying to, we already see this with Facebook and Google voluntarily removing ICO ads. So that gets rid of a number of the scams targeting retail investors. So I think if we're intellectually honest, there's a question. Yes?
Please finish yourself.
Okay. I didn't know it was going to be. More questions are okay. If we're looking at this from who actually is benefiting right now, it's anyone who gets involved in pre-sales because they're able to get these deep discounts, then they're able to flip it onto the secondary market to unsophisticated investors who have no recourse in case anything drops out. Now, obviously, it's the quote-unquote a bull market, so everyone looks like a genius. Everyone who buys into these things looks great. We only have the odd ones like Nano who gets hacked or something like that that look bad. But I think the day of reckoning is hopefully going to come and wash out most of the bad actors. But again, it couldn't come too soon because I think it's creating perverse incentives for companies that should otherwise be raising traditional ways, but instead of just trying to tack some kind of coin onto it. So, I'd be happy to be quoted on any of that.
You will be.
All right, okay, so we clearly talked about a few more advanced regulatory type stuff. We're going to talk more about that. We'll have questions for that. We're going to keep on going with more questions for another 20 minutes, which I'll ask, and then you guys will get a chance, 20 minutes to ask some questions. So prepare some questions ahead of time and think of what you'd like to say. We'll take it back a little bit to a little bit more of a basic. How many of you, by the way, have your own portfolio right now, a blockchain portfolio? How many of you do not? Okay, good stuff. Well, so in with that question, let's go into Yisel. How do you spot a quality coin or project that you might be interested in investing in? And after that, everyone else as well. How do you spot a quality project?
Yeah, actually, that's the question I've been hearing about really a lot because thankfully the project I got priced, so really good, I guess. And investment-wise, it's really good return. Like for example, the iPhone was $100 and then some other projects will make a really good return as well, like 30 to 50x. So, but for me, answering to this question, always I have one answer is good. So the question was usually like, how do you advise a project this well? And then my answer is, good project is just good project, and a good team is good team. There's nothing I can change too much, and then so it's done. And then so for me, the most important thing is the team, because actually the project at this stage is just at this stage, but we are investing in what it will be like, and then either the change is happening from people, so it's the team to be the most important thing. So so that's my answer.
So I actually take a little different approach on this. I look back at Bitcoin and why did Bitcoin become so popular and in the early days. I mean, you go back to the very beginning of when Bitcoin kind of got that network effect. Anyone know what it was? What was the catalyst?
It was
Silk Road. Silk Road, absolutely. So there's a cycle of use and people have a demand for that coin. So they wanted the drugs, they'd go buy Bitcoin. They'd buy the drugs, they need more drugs, go buy more Bitcoin. That cycle of use drove so much demand for the coin. And so when I look at a coin now, I look at what's the cycle of use. And then I also look, is there another coin that already can do exactly what this new ICO can do? Like if you could use Ethereum, you could use Bitcoin, or you could use Litecoin or Dogecoin, I don't care which coin, and you can do the exact same thing as what somebody's proposing to do, why do you need that token? So my theory is most of the tokens that we have out here today go back to zero. It costs almost nothing to launch a token, and we're going to ultimately, for most of them, end up back at zero. The ones that are going to change the world are going to change the world. I mean, if you can imagine a world where you have let's just say a Lyft coin or an Uber coin, where that's the only way you can get those services is by buying that coin, and then you have literally hundreds of coins in a wallet that's a smart wallet that can flip in between all of these different ones. And okay, I have Joe coin and I need to have Uber coin, and you can flip them and pay a little minuscule fee and you don't care. That's what I see as the future, these distributed apps that can do all of these different things. But the quality of the project, the other thing, it definitely, I agree with you that you have to have the industry expertise. I did bring Wax up earlier. That's one of the things I love about that particular project is because the team has been in virtual currencies for 25 years, not 25 years, about 20 years. They've been in from the early days. They understand it thoroughly. They understand gaming. They understand gaming behavior. And then they now also understand cryptocurrencies because they've been in it since the very beginning. So when you see all of those elements together, you have a good project. So experience and then that cycle of use are the two main things I look for. And after that, there's a handful of others, but yeah, I'll skip this.
I'd answer it slightly differently. This is a space of innovation, new business formation, and entrepreneurialism. So the investment disciplines still apply. And those are, is it a big unmet need? Is it a unique solution? Will it make money? Will it scale? Can we defend it? Will we be able to sell it, or at least operate it in a very successful way as a standalone business? Is this the right team? Is it complete? Can they get this done? And either you are able to do that due diligence on whatever you're investing in, or you have to trust someone else. And if you're going to trust someone else, then there's a couple of other questions kick in. Who are they? What's their vested interest? Are they on your side of the table? If not, caveat emptor. This space is rife with people who are snake oil salesmen making money off you by selling you something they don't even believe in. And it's not regulated, you're not protected, so you have to apply the discipline. So again, back to our strategy, I can't ask all those questions of a technology that I don't fully understand. I'm investing in experts. So it's Bart and Brad and Spencer and Brock at Blockchain Capital Partners. It's Pantera and the team there. It's a handful of others. I put my money on them, let them make those decisions. And then when it comes to the ICO environment, absolutely. You've got to network through value added into the inner circle and be one of the people that gets the 50% discount in the best deals that are going fast. And anything else, you shouldn't buy it.
Tim, how do you spot the snake oil salesman? Like, how do you know it's a scam? What are some of the things that clue you into
I
that?
think the easiest thing is just assume everyone's scamming and then just try to filter from that. So,
And I agree with that point. I agree with that.
in fact, just to give you an idea, like how I would, if I'm trying to consult a group, and I would, poster?
Yeah,
There you go. Oh, okay. Somebody should be doing that motion, although it could look kind of weird. So, yeah, the way I dumped it, I hate talking about dumping clients, but I walked away from one client after they refused to do two separate things. They refused to do a security audit on any of the code. They felt it, hey, it's a smart contract, it's going to be smart. I don't know why everyone thinks that automatically these things are smart. They're not. The second bit is that we said, and this was right after the Munchie order came out. Raise your hand who's read the Munchie order from this. Great, so there's like 5 people here who actually care about the law. So the Munchie order, again, I'm not going to, we're at a law firm, so I'm not going to sit here and lecture to you because I'm certainly not a lawyer. I'm not going to bill you. I should have. The Munchie order came out, and I circulated it among this client, and I said, hey, you guys should read this because you guys have like 17 things you're doing exactly the same, like page by page. You're trying to create an appreciation of this. This is why you're hoarding all of these coins yourself, and among many other things. And they refused to budge on that, and were like, you're gonna get busted. About 2 months later, they reached out and said, hey, we didn't do an ICO sale, at least we put it on pause, and we're going to try and do private placement. So I still wouldn't pick them up at this stage because the fact that they're being so obstinate on things that are very existential. There's no reason for any of you to wear jumpsuits unless you really like orange. I'm not sure. I'm a ginger. I don't look good in orange, so I'm not going that route. But I'd say for me, the easiest way to filter is their approach on the regulatory front. If they're not willing to engage with either a legitimate law firm, not someone calling themselves a crypto lawyer. If you're getting your advice on someone on Twitter because of the amount of retweets and stuff like that, you get what you pay for, and retweets cost nothing.
Yisel.
For me, actually, so scam because the people are talking about the easy scam because like a pyramid scheme, like the people get a really big discount and then less discount. But to be honest, for me, the indicator of the scam project is if they try to give me the really large bonus and then I don't invest at all because I know we all own all the funds. I guess a lot of investor loans. What's gonna happen if you receive a really big bonus and then people dump after getting listed. So it's really so it's not really at the end of gaining anything. So that's for me the one of the indicators. So and then in this sense, I don't think it's really the pyramid scheme because if you really design the pyramid scheme as the your token sales at the end, it's not.
Are you a pyramid scheme expert?
No.
Yeah. I just want to add one other thought, which is well-meaning people might mislead you because they don't really understand the risks. And the reason why most PPMs have risk factors is because investors need to think through the breadth of risks that an investment holds. Most ICO white papers have no risks. And yet we know the failure rate of angel investors is 60 or 70%, of VCs it's about the same. So we know that innovation carries huge risk. And that's true in this space too. And the biggest risks are simple things. The team isn't actually able to build a company and deliver on the promise. So anyhow, whenever you see a offering document with no risks, I think it's not the full story, and therefore you might put a scam name associated with it. I definitely think a good team would tell you the pros and cons of their strategy and their vision. And I expect the white papers will soon include those things.
Yeah, another risk we haven't talked about yet is you want to make sure there's lockup periods on the founding team, because you don't want a situation where the founding team is suddenly rich and they're off partying on their boats in Miami, and guess what? They're not working on the project. They're not working on building this platform and building the vision of what they put into the white paper. So you really have to look out for those lockup periods, make sure the team's going to stay intact, because already we've seen a number of projects that the team had their payday and they're on to the next project and they're on to the next one. So they're basically just, launching it and they're out the door. So look out for that too.
Awesome. Thanks, Steve. So moving it back to some advice for people who are just starting out, basic investors or people who are intermediate, whatever you want to call it. How do you sort of assemble your portfolio? What do you recommend? Should there be a makeup of the portfolio? Should there be a certain amount of newer coins, older coins, established coins, international, national? What are your thoughts on that? Who would like to go first? Anyone? Tim. Let's make Tim do it.
So again, when I go back and report to investors who say, "Hey, should I invest in this project?" I was like, at the end of the day, these end up on secondary markets. These are being moved by retail investors. So that's the only way you'll be able to measure whether or not something will go up or down is sentiment analysis. So basically on news cycles, there is no, if you look at anyone that's tried to predict or try to create a valuation model, every single one of those has failed because they're unable to incorporate the ability for retail investors getting scared, shaking out, and selling the coins. And so I don't ever advise certain portfolios. I'm certainly not going to go on stage and tell you a certain one. I hope that you guys do all due diligence and just be intellectually honest with yourself. At the end of the day, these end up on secondary markets. People who are buying these and moving them around in bulk will be crazy retail investors who have no business whatsoever buying these. But you can make some money on this.
Well, I would actually go back to basic principles of portfolio management. So I would say you have to look at your entire wealth picture, and you have to think about your obligations and your future. And you have to say, do I have kids? Do I have a spouse? What are my obligations? You then have to make sure that some of your wealth is in a preservation bucket. And for some of you, that might be all of your wealth, for some of you, maybe a fraction. For that you can afford to risk, then you can go through the process of how much and where shall I apply that. And there's so many technology domains. What we're talking about today is just one. Artificial intelligence, Internet of Things and sensors, the maker movement, 3D printing, life sciences, genomics, all of these things are going to change the future. So again, a strategy of diversification would say, don't put all your eggs in one basket. And this is something I wanted to leave behind because I think it's an important point from the dot-com boom. You ought to have a bucket which is called future tax obligation. And I say that with real meaning and purpose because a lot of my friends went bankrupt in the dot-com boom. Why? Because they got option grants with the tax obligation and the options went to zero and they couldn't pay the tax. And some of the most successful entrepreneurs found themselves in that bucket owing tens of millions of dollars. Coinbase will report your gains over time, they'll be forced to, and so will everyone else. And if you see your coins go to zero, you will not be able to pay the tax obligation if you receive tokens for participating as advisors in ISOs or other things. So I actually have a bucket which is called tax obligation. The problem is you can't have that denominated in tokens because you owe US dollar taxes. So unfortunately, you should always be putting some of your gains in this game that you're playing into that bucket, and it should be US dollar denominated if you pay taxes in the US.
I completely agree with Matthew in terms of the diversification, and you should have real estate, you should have mutual funds, and then this is in the high risk category. There's no doubt. I used to tell people 5% of your portfolio should be in coins. The problem is then suddenly 5% became over 50% of my portfolio, which was great. I was very happy to see that happen, but it still works out that way. So 5 to 10% should be in these tokens. And in terms of diversification within, try to invest in things that you know and place things that you understand. So if you happen to be in in gaming or you happen to understand those markets, look for the ones in that space where you can look at the team and say, are these guys actual players in this space, or did they just come up with the idea and try to just build their plan, or is this a team that took a business plan that had nothing to do with blockchain and they blockchainified it, and now they're going to try to come to market with an ICO because it's a money grab. So those are the things you look out for. And then I still say, in terms of what coins you're owning, you still want to own Bitcoin, you still want to own Litecoin, you still want to own Ethereum. those are sort of the ones that are the more stable, the ones that should. I think a lot of these other tokens that have come, and there's a lot of money going in, it's not going to go back into fiat currency. It's going to go into another token. Somebody's going to flip out of XYZ coin and they're going to go back to Bitcoin because they're going to feel like that's a safe harbor. I really feel like Ripple, for one of the reasons Ripple's been so popular is people sort of see it as an anti-token to the other ones. So it often acts contrary to the others. So they'll see it as a safe harbor. I'll go back to Ripple right now and wait it out until I can go back, buy back into Bitcoin. So some of those ones that are a little bit more stable, that have been around longer, the longer a blockchain has been around, the more value it will have over time is my theory of investing.
Thoughts on allocations?
I think for me, I ask myself, I'm the trader or I'm the investor. So I think that's the most important question. I guess maybe you should ask yourself. And if you realize you're the investor, then you're focused on picking up the right project and hold it. And then as an investor, maybe you minimize the number of the transactions, like sell and buy. And then when you need to decide on what the value of the project, how many X you're gonna achieve, and then you sell. So and that's the first thing. So and then second thing is everybody has a limited asset, like a limited money you have where you can invest in. So what I mean is like a fiat currency, you have a limited fiat currency. So once you don't have a liquidity anymore, but you can't invest anymore, so you have to sell. So for most of the investors, they definitely sell maybe when they achieve the 2x or 3x, one number achieved, they always maybe liquidate their original investment amount of money, and then also you always have a money you can keep investing in. So maybe that's maybe another thing.
All right, I'm debating whether or not I want to go for just another. Let's do one more question that's a little bit more basic, and then after that, let's talk about the regulatory stuff, about what Jay Clayton, the SEC commissioner, recently said about securities. But it's obvious that things are volatile right now. A lot of the coins are down. Do we definitely see them coming back and being stronger than ever before? Do we definitely see that? Matthew first.
So for most investors, that's not a question you should worry about. So, again, back to basic financial principles. And I should have mentioned, by the way, my wife was a CFO and head of strategy for BGI BlackRock, which is the largest asset management firm in the world. We launched iShares, et cetera, et cetera. And the basic principles say be diversified, dollar cost average, which means you invest through the cycle, ups and downs, be a long-term investor. Don't try and be a day trader against the world's most complex mainframes, optical cables, massive information sources, and algorithmic trading. That's a game you're going to lose as an individual. So instead, seek out the places where other people have smart strategies to help you invest. And I really believe that. So I don't worry about the ups and downs. I think this is part of the future. And so I'm trying to place my bets. And then I ask, currencies, I happen to be in GBTC and the SEC Zcash product, bought them a long time ago, but there's a huge premium. It's no longer a smart product. Bitwise, dynamically generated top 10 currency product, Hunter and his team up in San Francisco, that's a smart product. When we have ETFs, that will be a smart product, but they don't exist yet. BitBull, which is cryptocurrency fund of funds, low minimum, low costs, based in San Francisco, that's a smart product. So you seek out the smart products. By the way, you can hold BitBull in an IRA. So to the extent, through Pensko Millennial, so to the extent to which there is an unknown tax consequence of owning these assets, put them in your IRA, because you don't have to worry about the taxes until the future, and by that time the tax issue will be resolved. Whereas if you hold it right now, at the end of this year, what on earth are you going to do? How would you even track the basis?
Move to Puerto Rico.
Well, that's another topic. But so what I'm trying to say is financial services, if you're an expert, play the game directly, but most people are not. So then look for the smart players in the space, get your money behind them, and that's our strategy. So.
Look, I'm not an attorney, but if you're going to advertise, if you're going to go to Puerto Rico, don't advertise it in the New York Times doing an interview. If you haven't seen it, there's some idiots who did that. They're going to be audited. They should be audited because they're clearly going to be doing it. They're clearly trying to evade specific taxes or avoid. I guess is the word that they like to use. So just to give you an idea of why I don't think the market will necessarily go to zero, even as cynical as I might be, Citi research put out a note in early January. That was kind of an awkward moment. Put out a research note and said that based on its analysis throughout all of 2017, they think only about $10 billion, actually less than $10 billion, came into the entire market to give it a notional value of about $600 billion. So it was very little money came in their opinions, to actually create this quote-unquote bubble towards the end of the year. And Morgan Stanley did a similar analysis in December that was unpublished. If you know these equity analysts, they'll tell you these things. They found between 2 to 8 billion came into the market. So if you're looking at it, whether or not prices will go back or up or down, obviously I'm not going to sit here on stage saying it will go up to a certain level, but to crash all the way down to zero basically means no money comes in. And we all know, I have a grad school classmate from 12 years ago, or a classmate I had talked to him 12 years, running them up in December, said, hey, I want to get on Binance, how do I do that? I haven't talked to them. And I was like, well, why are you trying to get on Binance? And they were trying to go like, oh, we can't get through Coinbase and all this other stuff. So when you have people who are smart but unsophisticated in trying to get in, you know that I don't see why that bubble would have stopped. And as I would call this a bubble, I just don't know when it will end. And I guess the last number I'll say is, if we're talking about funds, just to give you an idea, there was some research that was published about a week ago that found about 226 of these quote-unquote crypto hedge funds that exist with AUM of $3.5 billion to about $5 billion. So just keep in mind, though, that no one's audited these. None of these guys really, aside from maybe the block towers of the world, are trying to be legitimate by having KPMG or any of the big four actually go through their books, let alone figure out a way to actually analyze whether or not what's on the books is legitimate. So definitely buyer be aware on any of this analysis. But yeah, I would say that just this small amount of money going into the market is easily moved back up. That's not an investment advice.
This is like one of the most popular questions. Is it bubble or not, right? And then to be honest, I guess I watched the movie The Wolf of Wall Street, and then which is like, and then exactly same as the one.
You got motivated to do ICS.
Yes. This is like we went through the same thing, and then now it became the traditional finance, and then everybody believes this is legitimate. So I believe though we are just coming into the new world, and then now I guess maybe I'm one of the most, I don't know. I guess myself I'm very biased. I'm very I'm very positive about this industry, and then so I believe in the industry. For me, like people maybe sometimes losing their money even if they really believe in a certain project, and then sometimes you give up like what you believe earlier, and because the market gets so by the market sentiment, which is really strong. So.
Yeah, I don't think that Tim gets invited to many parties. It's really great to hear a contrary opinion, because you don't hear it very often, and a lot of people in the industry are the ones that are so excited about it. They see the future, and I'm one of the guys who's always like, I see the bright side of this. I see these projects that have such potential, and they have funding that has never been possible for in history, where they're coming from all these unknown sources, and the money grows, and it continues to provide the team with resources to continue to innovate. So that's why I truly believe a lot of these projects will change the world. There will definitely be a bunch of them, and a large number of them, I agree with Tim here, that will go back to zero. So beware of that, and know that, if you're going to be a day trader, like you said, you need to be on top of it every single day. If you are going to be holding a coin that's highly speculative, you better be watching it, because it can go really, really low, really fast, and I mean like within 10, 15 minutes. And I've definitely been victim of, like Matthew, of being chopped up by the bots and the algorithmic traders that are out there, and they will always beat you at day trading every single time. So anyway, be careful out there, and but it's exciting times. We get to do things that we've never been able to do before.
All right, let's take to some questions. We've got 15 minutes left. I saw you first. Go for it, sir.
Okay, so speaking as from the perspective of a long-term investor,
That's my goal. So I own, we'll say, a bunch of coins, and some of them are on various exchanges, Binance, KuCoin, whatever. And also some of them are in my hard wallet, some of them are in my Ether wallet, some of them are in ICOs. I actually have some in ICOs as well. So it's all over the place. But if I'm to, we didn't get into the regulations, but regulations are coming. I'm feeling like there's going to be some real, hammer coming down. What are you doing to protect your assets in the event of an upcoming crackdown? If you're in it for the long term, what would you recommend we do if there's a crackdown coming?
If you look at some of the, first of all, let's talk about your strategy of where you're holding your coins and so forth.
That's not my strategy. That's just where
No, but I put a ton of thought into this. And I travel a lot, and I'm relatively high profile in the industry. So I just make sure that everything, I can't get to any of my coins. And I can get to small amounts on my phone, small amounts in exchanges, but by and large, my tokens are locked away in hard wallets that take me days to get to it, and I have to talk to multiple people to make it happen to get to those. And so, I definitely recommend a strategy of anything you want to hold long term. Like the big pot of Bitcoin, just put them away and just make it so you can't get to them, or you need multiple things that have to happen in order to get to them. And that's just a good strategy. On to the second part. Oh, I'm sorry, we're getting short of time.
No, we got 14.
Okay. And so I'll stop there. I'll let some of the other panelists.
What's an example of a process, maybe what you guys know, a process that takes like multiple people to get to the money that you just aware?
I would never talk about it.
Oh, okay, got it.
Never. But you think about old school strategies. Like you don't want to put it into a safe deposit box because now somebody make it so nobody else can get to it. So we're talking about strategies like planting things in gardens and.
Look at his garden when you get to it.
So we're back to the days of putting things under mattresses, or?
That's right. It's like 5.5 acres. Good luck.
Good offset. So back to the regulatory stuff. Again, I'm not a regulator. I'm not a lawyer. I do talk to them quite a few often throughout the week because of my job. So Jay Clayton, who knows who Jay Clayton is? You guys hang out with him? Jay? Yeah, so he's the SEC chairman. He was on a Senate hearing about 2 weeks ago, and he said basically he hasn't seen a single ICO that doesn't meet the definition of security. So, and I won't speak on behalf of the cryptocurrency world, but on the ICO front, if you are buying something that is an ICO, take into consideration that there could be rescission orders for that. Rescission is basically the government agencies telling the issuer that they need to send a redo, mulligan, basically saying, hey, we'll either give you cash back for this investment or you keep your shares, and some people keep their shares for whatever reason. Again, I'm not saying it will happen, but it sounds like that could potentially happen. So consider the fact that you might get a rescission for whatever ICO you invested in. Also consider the fact that they may be disgorged, so you might actually have to give back that money for whatever reason. Again, I'm not a lawyer, happy to step down while somebody stands up. And also consider the fact that if you were promoting any of that stuff and being paid to promote it and you didn't disclose that, then you could also potentially be sued. I mean, we could talk about all the scary stuff if you want. That's my favorite stuff because then we find out who really is bullish about things. But yeah, if you're wondering how to secure those things, obviously I'm not going to talk to you about operational security stuff unless you want to pay me a lot of money, and then I'm happy to walk you through defense in depth and all the different hardware wallets and things like. People have bunkers, like Zappo has bunkers. I'm not saying you need to go buy a bunker. In the U.S., I believe Kingdom Trust in South Dakota is the only certified custodian. That's why they should be able to use the name trust relative to the rest of the market participants. So again, I'm not endorsing them, but they were just acquired by BitGo for that very reason. And I expect that they make sure that they have quote-unquote clean coins. I don't think they custody any ICO coins at this stage.
More on that. So I would just say it's back to basics, right? Know who you're doing business with. Be confident you can trust them. Make sure that their interests are aligned with your own and that they're not on the other side. Understand this is money, and money attracts bad actors and bad practices. It always has and it always will. That's why regulations exist to protect this. But right now, if you're doing business with people you don't know, you're exposing yourself. This is software, so as you've already pointed out, the hackers are out there right now trying to get your codes, and so you've got to be very thoughtful about that. The taxman will come, so don't do anything silly. You may be feeling right now, well, I can hide this. They'll never know, but unfortunately they'll unwind that lack of transparency over time, and they will send you a bill. So you better be prepared for that, and don't take the risk that you won't be able to pay it when it arrives, because these things go up and down, they're very volatile. So I don't think there's anything I just said is anything other than the way it's always been, and I'm simply trying to apply it into this space. I remember in the dot-com boom, I never understood eyeball-based valuation. It didn't make sense. So the fundamentals of investment apply here just as they do to every other area, and just apply them.
Yeah, I think maybe the protection from the volatility, market volatility, like if I answer to that question or one of your questions, and then like a largest trading firm, like in the crypto space, one of the very largest trading firms, they always try to hire the traders who has all different like style and then different characteristic and different personality. So in this way, they can diversify the investment that way. I think it's really important to diversify your investment. And then I guess myself, I'm trying to invest in a lot of different crypto funds and with who has a different style. So I think it's that so in the maybe same way, if we try to apply to the personal level, I guess it's maybe I will do the same things with my own funds and then divide into two and then doing the different way. And one is maybe keeping the 40% of the liquidity. So in this way, maybe I can be more less volatile and then maybe less volatile at the same time that when you want to make a really good investment, so you have a liquidity. And then the other one, maybe you can do the long-term investment, or you can do the trading, like daily trading, if you are the trader or you're the investor. So maybe it can be one of the ways you can diversify your own investment to prevent the massive exposure to the volatility.
Great. Questions? More questions? All right, let's take someone from over here. You.
Hi. So I thought what you guys were saying is great, especially where maybe you're going to put 10% of your portfolio into crypto. And for that 10%, how do you effectively diversify it? It sounds like if you're an accredited or qualified investor, the answer is to find a fund that deals with crypto to be doing your research and ICOs and things like that. Maybe if you're an unqualified or not an accredited investor, how do you recommend your average, mom or pop get exposure to the space?
Let's make each question or each answer short.
Yeah, I'll be very fast. I usually tell people like about 70 to 80% should be in the really big stable ones. The Bitcoins, the Ethereums, the Litecoins, the one that have the network effect, Dash, Monero, a couple of other ones like that. And then like whatever your risk portfolio is or your risk tolerance is, So that should be your 25 to 15%. The more you can risk, then you can go into some riskier things. And then there's a couple, it's always fun to take a couple flyers on things that you're like, hey, this is a while here, let's just try it. But that's my strategy.
You guys, any other
Quick thoughts on that question?
What I already mentioned that for that person who doesn't have very much money, well, there's a question of are you accredited? If you're not even accredited, in other words, you don't even meet that bar, I think there's a real question of whether you should be playing. But but if you're, at that point, it becomes super complicated because most of the good products and the good teams can't take your money. And that's back to Tim's point, which is they're the smart ones. So when Blockchain Capital Partners, Brad Barton, Spencer now, did the first ever security token offering, it wasn't happenstance that they did a security token offering. They did it because they knew that sometime in the future it would be considered a security. It's a security. They're taking your money, putting it into a fund and investing it in other things. So it's a security. And so they set themselves up for a long-term future. The problem is if you're not accredited, they can't let you in really. So I think that is this wall, this is this dividing line. And I think the regulators will reinforce it. So I'm not sure we should give advice to non-accredited people to play in this space. because the danger is they would begin and then they would be told to stop. And that could be a really, typically when you buy something and then you have to sell it under duress, you lose money. And I sort of suspect the world suddenly, a lot of people are going to have to sell something that they didn't want to sell, and it's going to be a buyer's market, not a seller's market.
I just want to clarify one point. When I was talking about those percentages, I'm not talking about your overall investment portfolio. I'm talking about just what you can do in crypto, which should be a really small percentage of your overall. And again, I'm not a professional. Disclaimer.
Next question. Let's go for you.
I was curious, out of the cryptocurrencies out there, what you believe is the most scalable backend for the long term? Because that can influence value as an
Can I
investor.
take that one?
Yeah, sure. We have 5 minutes, so let's make it sort of quick so we can.
This is about technological obsolescence. It hasn't been built yet, and it's coming. And it's going to be very low cost, very energy efficient, very scalable, and that's why it's going to blow out almost every one of today's cryptocurrencies. Google killed Intome.
Yes.
Is there going to be a big washout coming, kind of like that? Wiping away like 2000, all the... Oh, anyway, go ahead. Any thoughts on that? Is there a big washout coming? Yeah, there is. You guys pretty much think so. Okay, next question. You.
My understanding, and it may not be correct, so correct me if I'm wrong. My understanding is that if there is a utility coin, and there is actual utility in the coin, then an ICO can be offered, and you can bypass the registration with the SEC. I think for that reason, like 99%, that may be wrong, are claiming to be utility coins, and they're not registering with the SEC. But my question is, what is a true utility coin? What is in that category, and which ones are, if you know, which ones are very likely to be burned by the SEC?
Well, I can't answer that, but Jay Clayton has said that if you look at facts and circumstances around any of these coins that were done through an ICO to find out the economics of it. And then he's also said that, and in fact, he wasn't the only regulator to say this. He said you can't even use a euphemism. So even if you're saying in your white paper or whatever, saying, oh, this is a utility token, that doesn't matter what you call it. At the end of the day, they're going to say, hey, well, what are the actual economics around it? So they haven't actually, to my knowledge, said specifically anything that said this is specifically a utility token at this time, mid-February.
So to me, the most pure example of a utility token is going to Vegas and buying chips. And you go there, you give them money, you get chips, and now you can play the games with those chips, and it's the only way you can play those games, the one and only way. And so that's a utility token. I mean, the problem we have with regulators, and by the way, I do applaud them because they've been relatively light touch on everything, do no harm, as has come up a couple times in the recent deliberations. But anyway, the interesting thing about it is, there should be only one body of law that regulates this, but there's really not. We have this sort of jurisdictional arbitrage that's going on right now. You've got the SEC saying it's a security, CFTC saying it's a commodity, you've got the IRS taxing it like a property, FinCEN says it's money, and the FDA says that it tastes like chicken.
Next. You back there. So aside from the SEC, what are your thoughts on registering with state laws when you're doing a security token offering, and FinCEN and all of the other regulatory agencies? Have you done any of that paperwork and due diligence? Have you needed to register with individual states? What are your thoughts on that process? State-specific laws.
We have a couple minutes,
1 minute.
Okay,
lightning round.
So Joseph Borg is the president or chairman of the NASAA. He was talking about this yesterday. NASAA is, all of you guys know, that's the one that launches the ships. No, it's the the National State Securities Association. So all the states go and hang out. And he was saying the interesting thing with each state, they don't all have to file suit. So, like, for example, Texas filed a cease and desist order against BitConnect. Massachusetts filed its own cease and desist orders against Caviar. These different ones that just as long as one does it, that order can be moved around across these different jurisdictions. So that's all I can talk about is that security one. Breaking into FinCEN and money transmission is a whole other topic.
All right, let's wrap it up.
So let's give the panel a round of applause. give this lovely lady a round of applause. She put the whole thing together.